Good morning, everybody. This is Marco Marinucci, the founder and CEO of Mind the Bridge. Today, we have the great pleasure of having two speakers from Shell Ventures that will join us to talk about really a very particular time of our economy and development. So let me welcome Giancarlo Savini, manager of Shell Ventures, and Kirk Coburn, investment director of Shell Ventures. Giancarlo, Kirk, how are you?
Hey, all good, all good.
Doing great.
Yeah,
good to talk to you, Marco.
Same here. So let's place where each of us is actually located. I'm here in the Bay Area. How about you, Kirk?
I'm in Houston.
Houston. Giancarlo?
Yeah, as well, in Houston, based in Houston, Texas.
Okay. All right, so not too far from each other. All right, so very excited to have this conversation also, because in all possible industries, really talking about oil and gas today is as a particular interest that goes across the board. So again, we're in very fluid times, and when we're recording, probably might be different from when this will be shown live. So we're gonna just record the world around us as we see it today. And as we see it today is actually, I think, pretty hard to comprehend to some extent. So, I mean, to get it started, maybe Kirk, I will start with you and just to give a sense more at a macro level, what the heck is going on? I mean, where is the oil industry headed today? And before, let you answer, I was just referring to a post that I had on LinkedIn literally the week that the pandemic got started and was totally unrelated to that. And I was mentioning a statistic that I was looking on the global Fortune 500. It really was astonishing to see that 9 out of 10 of the most successful companies by revenues and sometimes also by profitability, but really that's in 2019, are coming from oil and gas and related industry like automotive. That's the state of the art to 2019. Where is the oil industry today, and where do you think is headed?
Well, I'm definitely not probably the best person in the world from Shell to comment on where the oil industry is heading. I think, we're long-term investors at Shell Ventures. And ultimately, what we believe is that there is an energy challenge, even with today's unprecedented, COVID-19 combined with and/or causing sort of this, what we're seeing in the oil price and supply market. Regardless of sort of what's going to happen in the short term, we see that there's an energy challenge. There's a growing population. We still believe that there's rising demand. There's a need for mitigation of climate change. And so, for us, what we're trying to do is we see sort of two important trends cutting across the industry, both digitalization and electrification. And we want to be in the middle of helping Shell transition during this time. And so we focus not only on looking at our existing assets, making them more sustainable and more efficient, as well as thriving through this energy transition that we think is and will continue to grow.
And then again, the focus of the conversation will be and is venture and innovation, but we cannot not ask specific questions because especially in today's news, are so front and center, the situation with oil. And let us just real quick understand really in simple terms, what's the situation, especially in US with the negative price of oil, and what is that telling us today in US?
Well, I mean, I think that is, that was a short-term situation, negative oil prices on May deliveries, but that is definitely not in our, I don't know how you make long-term investment decisions based on short-term, market impacts, and we're long-term investors. So I can talk about that, but our investments, not only through Shell Ventures, but also personally, I'm a long-term investor. I look for value. At Shell Ventures, we're looking for value. We're looking to invest in great entrepreneurs that are going to be building solutions that will help us over the long run. So it's really hard to make and look at these sort of short-term market influences sway how you think about it. Now, probably the one thing we do look at is this is a time that, in many ways, the market's resetting values or actually prices. I think there's going to be a whole reset as people that have raised money externally that still require more external capital. I think they're going to be in an interesting situation around what's the value of that company under today's new rules.
Very much so. And so, let's dive into actually the real topic of the discussion, that is Shell Ventures. And I would like to dive a little deeper in your structure, because I think that the way that you are organized is pretty relevant also for the audience that is normally seeing our deep dives. So, Kirk, let's start from really high level, a little bit of history of the fund, the investment thesis, and particularly then what are your investment horizons? So we know we talk H1, H2, H3. So what is Shell Ventures today?
Yeah, so we Shell Ventures is we are a little over 5 years old. We've got a team across the globe in sort of the major markets. So San Francisco, Houston, Boston, London, the Netherlands, where we're headquartered as a company, Bangalore, and then Beijing and Shanghai. And we are actually situated as a group within new energies. So the team that spends all their time thinking about the energy transition, that's sort of where we sit. We also have the great opportunity to also work closely with our CTO. And so our business is really to invest across the entire Royal Dutch Shell portfolio. And so when we look at horizons, investment horizons, we think about it from a portfolio management perspective. We want to find technologies that are immediately relevant, that can help our business today. Venture typically is sort of in that horizon 2, which is sort of the 3 to 7 year time horizon, where we want technologies that might be early, but are going to have the ability to scale quickly over the next few years. And then in some cases, we also look at, sort of moonshots, and some moonshots are going to be, sort of that 7-8 year plus. I mean, hydrogen investments could be moonshots, but we look for things that could radically change the business. So we look at it from a portfolio perspective. And so we take bets across the entire investment horizon, because we want to be not only good stewards of Shell's capital, but also smart in how we put together a portfolio.
Give us a sense of some numbers, the size. Is that an evergreen fund, and the size? How many people work in as part of the structure of the fund?
So we don't actually communicate sort of what our fund size is. We have numerous funds that we invest out of. So that's not something we really discuss. Our team is, as I said, we're in 8 locations. We take minority interest in the company, so we invest between 2 and 25 million over multiple series of rounds. We spend a lot of time thinking about how to deploy these technologies internally, which Giancarlo is sort of our expert and can talk a lot about. We lead deals and we also follow. So we're pretty, I guess we're pretty nimble, if you will.
Got it. And I think one of the interesting factor when looking at your organization is really what you just mentioned as part of what Giancarlo and Giancarlo's team work on, and the role of what you guys call the implementation team. So Giancarlo, maybe give us some context of how you guys are organized within the venture team, and the kind of the connected question to that is, how do you transfer the knowledge and the information throughout your business units?
Yeah, sure. So this is kind of an emerging field. A lot of organizations are moving in the same direction. Shell Ventures is one of them. Fewer companies are calling it implementation, other business development, other project management. But essentially, what we are doing, and we are a team of roughly 4 people deployed globally, is interconnecting the company that we invested in with the business unit. And the main objective is, I mean, deploying technology in large organization is a very difficult job. There are no silver bullets. It's really a process that needs to happen with time and dedication. So that's basically what we are fully dedicated in Shell Ventures. Some corporate VCs have been doing it inside as part of the corporate venture capital team. Others are doing it with innovation managers inside the business unit. Others are leveraging the R&D or product development organization. Others are not having it yet, and they are thinking about something similar. So we see multiple organizations, especially in technology segments that are not the fastest one, like hardware, for example, taking advantage of this organization.
So give us some examples of how, on a practical level, you do this. So is the kind of the request of ventures being originated by the business units, or is the other way around? So you filter the market and then you try to engage the business units as a result of the filtering that you're doing for any sort of a strategic integration.
Yeah. It's often starting with the business unit key needs, and basically what we are doing is to engage with them on a frequent basis, creating a relationship with executives of this business unit. They are inside their business, so they know what the key challenges are, and then I mean there is no any let's say advanced procedure to do that. We are just opening our eyes and ears, listening, seeing what they are, what their challenges are, and then when we are out in the market and we receive presentations from companies, suddenly you can immediately see and identify some overlaps, and that's how you tend to connect the dots. I don't think, at least not in my personal case, I don't think there is a secret process, and it's often a iterative process that needs to happen with several trials. It's people driven, so I don't think that you can it's not an engineering problem. It's not something that you can mechanize or structured more than a certain level.
So maybe it will be helpful also for the audience here to give some example of some of the investments and the portfolio companies that you guys have invested lately, and how effectively an integration with the business units happened.
Yeah. So I mean, we were, let's remain in the topic of power and renewables, as is one of our main focus. We invested recently in a company in the Bay Area doing grid optimization. Without doing name, it's a very established company already with clients and products at a certain level of maturity. And what we have been doing is integrating that company inside our energy platform as one of the core engine. And the main objective for us is of course to give an opportunity to the company to have revenues, but also to have a two ways learning. We are learning from them, and they are learning how big corporations are approaching problems. That's basically let's say a defined example. The way we are the way we see value in these corporations, it's and we are actually measuring it as much as we can, is how these companies are accelerating, improving, and provide an edge, a differentiator to our products and value propositions.
Yeah, so that takes me actually to the next big topic, that is measurement. One of the biggest, I think, challenges that we have in integration of corporate objectives of open innovation and the activities that they do in the world of ventures is to measure how efficient they are, and clearly that might vary based on the areas of implementation. So typically for a CVC is slightly easier, right? Because it's financial KPI that is pretty clear, that is measured. But also in your case, based on also what is your role and the role of the implementation team, it feels like the KPIs that you guys use internally go beyond just the pure financial return. So explain a little bit more in the details what kind of KPIs you use in particular at the macro level, and if those KPIs have evolved over time.
Yeah, so I just a premise. I mean, this is extremely complex topic. I mean, if you look at the California management reviews, there are thousands of pages written about this, measuring what is a value that could be even sometimes soft or intangible. It's really a challenge. The way we see value is basically in hard and measurable items, and also soft and intangible value drivers. And I mean, you can think about as intangible. You can think about building an ecosystem with partners and company. Intangible could be eyes and ears, learning from each other. The companies learning from Shell, and Shell learning from the company, reducing our safety exposure, an environmental aspect, although those are becoming more and more measurable. These are more the intangible items. And on another side, you have financial returns as well. I mean, we as a corporate VC, that's also very important. And also you have all the operational efficiency and cost savings that products can have in our operations. If you have a much more powerful engine in our energy trading platform, you can immediately see in the future some operational efficiency and cost savings. These are the two macro groups in terms of KPI. Every CVC has its own secret sauce. We tend to measure a bit of both. Of course, the cost, operational efficiency and cost savings are a bit more relevant in our conventional oil and gas business. Eyes and ears, building an ecosystem, building partnership is more relevant in emerging businesses like new energy and power and heat. So these are mainly the two areas. We tend to measure it with KPIs, scorecard. This is what the market is and similar energy CVCs tends to do. Again, here there is no any secret weapon. Some groups are doing it with scorecard, KPIs. Some are not yet measuring it. I haven't seen so far, at least to my knowledge, anyone using empirical formulas with weight or all sorts of complex formulas to measure this value. Usually it's something pretty simple. What I've seen maybe emerging, it's an increased utilization of case study, some sort of narratives that the CVC can use to go to their executive and show a bit the story around how specific investment is helping the company. It's more about the combination of the story, tangible and intangible items, rather than one number. That's a message.
Yeah, and that's definitely part of the complexity, but also the maturity of how at top management, I think we're looking at the impact of investments around innovation. It's definitely not a science, but we've seen this is part of the research that we do on a yearly basis when we do our state of the art, and we talk to a good 100 of best performers, including companies like yourself, how that pressure from top management on hard numbers is becoming more pressing, both from the top line and at the bottom line. And there is no, as you said at the beginning, there's no silver bullet, but it's interesting to share how this is also in a practical case been progressing within entities like yourself that is doing this kind of business for quite some time now. I would start talking about the more of a kind of the world ahead of us. And it's clear, again, you guys, as we mentioned at the very beginning, focus H2, but not only, and the kind of the future of energy is definitely something that is being front and center of the reason for being. I would just, take a note. Yesterday or the day before, a few days before probably, I was reading an article from the Vice President of the European Commission, among others, talking about the European Commission because their Green Deal that it announced before the end of the year was actually a big deal. And so the Vice President of the European Commission was kind of sharing, how can the world can be better? How can we take advantage of actually a crisis that is rebooting a lot of industries, and how can we really, as Winston Churchill says, don't waste a good crisis. And so maybe Kirk, maybe some of your thoughts of is that the current economical environment, has that changed much of your focus as Shell Ventures?
Well, what we do know is that if you kind of look at oil and gas, which sort of new energies, renewables, the power and mobility space, which we have less data because they're sort of newer industries, if you will. But oil and gas traditionally, innovation gets adopted during volatility and low oil prices. And so many would say that those are crises. So in 1980, the mid 80s, late 80s to the late 90s, to even the 2014, 2015, that's when you saw a majority of new technologies get adopted into the industry. So there's a couple of things that we look for and matters. One is you need context. So in energy volatility, as well as low oil prices, creates a context, but there's also technological context as well. So I think during this period, what you saw in 80 is you saw machine learning. You saw people actually writing software that could actually take sort of the manual processes and let the computer do some of the work to figure out how best to optimize processes. You saw in the mid 80s, you saw 3D seismic, and that's sort of during the time the compact computer and Sun Microsystems were getting started. You saw a few entrepreneurs focus on oil and gas to be able to deliver much better sort of workstations focused on processing all that data and making better decisions, which was never capable before. Again, volatility, low oil prices. Same time when the internet launched, it's a new infrastructure. So you saw all this new digital infrastructure get adopted into the industry. And now that you have cloud and mobile, you have a new context. And so you have a few companies that have already sort of broken out of the startup phase. But now that you have this huge volatility, low oil prices, I think what we're going to see is a new era of digital adoption, especially into the energy industry. I think the same applies to new energies as well. It's going to be slightly different, but ultimately, what for us, we see this as a great opportunity to see external and especially digital technologies get adopted.
Giancarlo, do you think that one of the fears that historically the world of startups has faced in economical downturn is when they are backed by CVCs? Potentially that's where they might get into trouble for clear reasons. A number of CVCs tend to slow down their investment activities, their support of their portfolio companies when the top line is facing serious challenges. How are you guys seeing this looking ahead as Shell Ventures, also based on your current portfolio? Are you also slowing down the amount of investment you're doing, or is business as usual?
Yeah, so of course, yeah, we remain committed to our portfolio company, and we're not expecting major disruption. What I can say is that historically, corporate venture capital, especially open innovation, so the strategic aspect of corporate venture capital, has had some booms, especially after major crisis. And if you think about 2001, after the dot-com bubble, created the sort of movement where Harry Chesbrough later on created the open innovation theory or name or formalize it. Then we had in the 2007 and 8 the financial crisis to the credit boom, and again in the early 2010 and 11, a lot of corporations use the corporate VC to embrace multiple strategic value streams: M&A, innovation, R&D, farming an ecosystem of partners, especially on the tech side. So historically, it's exactly in time of crisis that open innovation could re-find itself, and that's we are expecting the same also in Shell Ventures. So that's our feedback. We remain committed to our portfolio company. We are actually supporting them on a daily basis. We have a couple of examples as well, but that's our position.
I mean, Marco, I think the ultimate way to look at this is, as an entrepreneur, when you raise money, you need to be strategic and you need to look at your investors just as you look at your customers. And I think one of the things that our we both work for, wrote a great blog a couple of days ago about this, but you should look at kind of where's their balance sheet coming from? What is their holding period? What is their incentive? And I think that is, what we're seeing is funds that are not raising a new fund. If you raise money from them, if you need more capital, they're probably not going to be able to put more money in. If you seek investment from any investor that it has questionable balance sheet or it gets into trouble during a downturn, it makes sense that they're not going to have the money to put into you. I mean, you have to look at everybody. And as when I started my first company, the best advice my dad ever gave me, he gave me quite a bit of advice. And one of the advice is make sure every person you take money from, you understand what their incentive is, because when you don't, that gets you into big trouble. That's the same with customers.
So on a practical level, now that you're looking at new investments and we're in a lockdown, so you don't have the possibility to meet physically with the potential founders, with the founders of a company. Is that something that you can actually fully replicate in your evaluation process just online?
Well, of course. I mean, we want to see things in person because that's how you really get to know people. I think that makes it difficult. So in cases where we've never met a management team, it's going to be, we haven't written a term sheet yet that of teams we haven't met physically. So I think we haven't crossed that bridge yet. It will be interesting if we do get there. I think we'll sort of be out of this remote working before that happens, but you never know. I have a hard time, personally, thinking through that piece because, software is one thing. So, but if it has any hardware component, you want to go see where they make it, how they make it, whether they really have the equipment. Those things. If you've been around the block long enough, you realize that you have to actually go see, taste, smell, and hear to make sure it's real.
But you didn't face that pressure yet, because the cycle has been still relatively short. That hasn't slowed down your evaluation cycle. How many investments do you normally do per year? On average, just also to understand the quantity of deals.
Well, I mean, Giancarlo, I think we've disclosed how many we did last year, didn't we? Don't we?
Yeah, it could be. I mean, between 8 to 12. I mean, this is our all public information. Yeah, that's typically the range. It's not it's not a fixed number. It could change, but that's typically the name, considering the power side, oil and gas, and mobility. I think we are more or less around that number.
Right. So a due diligence, I assume, it takes several months. It's not something that can be rushed in as a purely digital investment on early stage. In your case, clearly that is embedded in the investment that you're addressing.
Yeah,
I
think
we're not looking for investments that it's going to be. I mean, I'm not sure it's prudent to get into deals where you have to hurry and be quick. We're a strategic investor, and we want entrepreneurs that see value in us being on their cap table. And if they need money and it's a rush, that also tells you in some ways that the company might be desperate for cash, which means, hey, maybe slowing it down is not a bad thing. So we haven't gotten to that situation, and I'm not sure, we jump into those situations in the first place.
Let's talk about some of what you mentioned previously. You see this as an opportunity, and to some extent also acceleration of new waves of opportunities, and digitization is clearly one of them. Maybe let's go a little deeper in some areas that you guys think and you feel bullish about, maybe even before, but through this crisis that could be accelerated. You mentioned hydrogen as kind of a long-term. Clearly renewables across the board. Can you go a little bit more specific in something that you guys are looking at now, or you think is definitely on a good opportunity in these days?
Yeah.
Go ahead, John.
Go ahead. Yeah, I mean, I can talk a bit briefly about hydrogen. I mean, hydrogen is one of the most common element. It's everywhere. Shell Ventures is still interested in hydrogen as well. The main reason is very close to our core business and operations. It has definitely a lot of potential. It generally requires patient capital, and one of the expectation and one of the what we wish for ourselves is that this COVID-19 could also accelerate this energy transition in a certain respect. Having a low oil price generally doesn't help that, but that's an opportunity that we can take to rewrite our energy policies. Kirk, what do you think?
I mean, I think the digitalization and electrification, I think, are two trends that we believe in, and I think even regardless of what's happening in the current environment, it's not going to go away. It's going to, in some places, be accelerated. Secondly, what we're seeing is, Shell, and especially our team, we're very customer focused. So how do we serve our customers? Customer needs are changing, and customers on the electrification side are asking for local and renewable power. So how do we serve customers that want to use more renewable power, and they want that power to also be locally generated because that's the most efficient way to do it? How do we serve that? So from an entire value chain, how can we help them on the retail, on the trading, as well as on the generation? and helping them think through that. So I think one of the areas of focus is being more customer centric and thinking about how the customer's needs are changing, because there's a lot of signals right now where customers are asking for this, and the current utility system was never designed to enable them to be able to generate, store, sell, and purchase renewable power locally from one another. So I think that's going to be an area that we believe heavily upon.
You're also very global in nature, both as a business and as a result also as on the venture side. You mentioned also your global presence. Do you see many differences in this path to renewables from one geography to another? For US versus Europe as a whole is probably the first macro big difference. We mentioned the Green Deal effort of the European Commission. Do you see many differences when you're looking at a specific options in subset of the industries that you're filtering?
Yeah, I think you need to look at, that businesses alone can't drive an energy transition. You need legislation, regulation, so government. You also need society to start participating by watching how they actually make financial decisions. I think Europe is further ahead than anywhere else in the world. I think Australia is and Japan are opening up their markets, and I think the U.S. is there as well. Those all make sense, of course, but Europe is absolutely, in many cases, regulatory wise and legislative wise ahead of everyone else.
Giancarlo,
which I think helps.
Yeah, and just building up on what Kirk is also saying is power market is by nature extremely local. It really depends on the supply. I mean, if you compare it with the typical oil and gas or the hydrocarbons market, you have a very important local component, and trying to understand this local pot of maturity. I mean, in US, we have markets like Vermont or California that are definitely leading the way. Trying to understand those local ecosystems that are leading the way, it's extremely important. So although it's important to keep the global view, and Shell, of course, has a competitive advantage in doing that, in my view, it's also important to keep an eye on a local level.
Yes, indeed. So, guys, thank you very much. I think that's been very thoughtful, very timely also. Stay home, stay safe. And we cannot shake hands, but the best we can do is actually a high five on the screen here and there. So I really hope to see you guys soon. And
thank you, Marco.
Thank you, Marco. Pleasure.
Take care.
Cheers.
Cheers.